Welcome. A lot of people are asking me to address artificial intelligence, asking my perspective on how AI will impact the economy, the market. And I want to address that, but in a different context than I do in most of these videos. In most videos, I provide concrete information on here's what we're seeing with unemployment, with wages, earnings, etc. But in today's videos, I want to talk about theory as it applies to artificial intelligence and artificial intelligence impact on the market and the economy. What I mean by that is that this is going to be less pragmatic, less practical. We're going to instead talk about some of those theories that govern all economic activity. And then in future videos, maybe next week, I'll talk about AI a little bit more practically. So, will AI ultimately liberate society, drive efficiencies, and create abundance? Or will it be a job destroyer that destabilizes society? I don't know. And there's no point I'm trying to convince you of or conclusion I hope you arrive at. Rather, as applied to AI, I want to review the immutable principles that silently govern all economic activity. My acknowledgments, first of all, to the Mises Institute, Michael Madulev, and many other critical thinkers in this space. What we see in this chart is that the labor market is tightening, meaning that there are fewer new job openings and fewer people leaving their current jobs. But what we cannot extract from this chart is causation. We cannot say exactly why this is happening. What we can say is that throughout history, technological advancement has changed how we arrange resources. AI lowers the cost of experimentation, research, and product development, expanding the scope for entrepreneurial discovery. AI will disrupt occupations, but it does not abolish the underlying principles that drive an economy, those of scarcity, value, and entrepreneurship. The byproduct of those principles and the entrepreneurial spirit is enhancements to productivity. Here we see a chart of decades of productivity growth as humans have been able to increase output for each unit of effort, meaning we're able to produce more in a given amount of time. Driving productivity by replacing rote human tasks with automation doesn't destroy value. It reallocates scarce human efforts towards higher value activities. This is the market process, which rewards entrepreneurs who discover superior ways to satisfy human wants, whether it's through workers, machines, large language learning models, or some combination thereof. So rather than fearing AI as an economic destroyer or viewing it as a minor deity that will satisfy our every desire, we could frame it as a tool that entrepreneurs will employ to serve consumer wants more efficiently. As Ludwig von Mises said, each wave of creative destruction followed the pattern of temporary displacement as markets readjust, followed by higher productivity and living standards as resources flowed toward more valued uses through the coordinated function of market prices. It could be that AI, beholden to these underlying economic principles, represents another chapter of creative destruction, a process that always has been and always will be. Thanks for watching. Enjoy today.